Hello and welcome to everyone tuning in. Thank you for joining us today. My name is Glen Goland. I'm a senior wealth strategist here at Arnerich Messina. We are a Portland-based investment advisory firm, bringing our unique and disciplined process to private clients, nonprofit endowments, and foundations. Today, I'm here with guest Sherwood Yuen, a senior portfolio consultant with Vanguard Personalized Indexing. We've been talking a lot about direct indexing with our clients over the last few years. And as the landscape expands and the technology improves, these type of strategies are showing numerous potential benefits. I first met Sherwood back in 2018 when he was running a company called Just Invest. Sherwood and his team had built an algorithmic trading strategy that was allowing clients to build tax-efficient stock portfolios that reflected their values by favoring or disfavoring particular stocks or industries. Vanguard purchased Just Invest in 2021, and now Sherwood is an integral part of Vanguard's direct indexing team. We thought it would be great to pull him in for an Ask the Expert podcast for a couple of reasons. One, he's a world-class human being, and we've really enjoyed working with him over the years. He's helped a lot of our clients capture some serious tax alpha in their accounts. And we thought it'd be a good chance to learn more about where things are today and where they're headed, and what clients ought to expect. So Sherwood, thank you so very much for the work you've done for our clients and also for joining us here today.
Thanks, Glenn, and thank you for those super kind words. I'll try to live up to them, but much appreciated.
Yeah, absolutely. Can you start just by giving us a quick background of you, sort of where you came from, what your history is and your experience, and how you managed to get involved in personal and direct
Sure.
indexing?
So I've been in the financial services industries for close to 23 years now, give or take a year or so, depending on how you look at it. I started my career at Schwab, worked at Wells Fargo, worked at Cal & Associates, and then also most notably, and I think this is where the story really takes off, is that my experience at MSCI. And MSCI is interesting because a lot of the direct indexing platforms and technologies that we see today came from MSCI, or rather, more precisely, the risk analytics space, and more precisely, Barra. So Barra is a risk analytics platform that helps a lot of asset managers and asset owners manage portfolios. It does it on a quantitative basis. It allows portfolio managers to look through specific portfolios, look at specific factor attributes, and then most importantly, it runs a quantitative optimization algorithm to help portfolio managers rebalance portfolios to specific purposes, to specific characteristics. Much of the technology that we built for Just Invest comes from that. Not only does it come from Barra and MSCI, but also comes from our experience at MSCI in particular, as we served institutional clients in particular.
I think that's actually where you and I first crossed paths, was when you were with MSCI. And so for the folks listening, what that meant for us as Arnerich Messina investment, as an investment team when we first met Sherwood, is they were able to go and build us portfolios that looked a lot like the indexes that folks often are comparing portfolios to, but allowed them to be really tailored specifically to the client's wants and needs. So Sherwood, can you dig a little deeper and tell us sort of how does personal indexing work, and what factors should clients be thinking about when they establish one of these portfolios?
Yeah. So jumping right off regarding our background and experience at MSCI, a lot of the work that we're doing today really comes from our work when we were working with large-scale institutional asset managers and asset owners, pensions, endowments, and foundations. So previously, we would go to a pension and we would talk to them, and they would have specific needs in terms of how they want to build their equity portfolios, specific customizations of sorts. Generally, we start with an index, and it could be of any index of your choice. Obviously, from MSCI, we chose the MSCI indices, but frankly, you can use whichever index family you want: S&P, FTSE Russell, CRSP in the case of Vanguard, and whatever your choice is. And the same method, the same processes, the same tools that we would help these large asset managers and asset owners build a customized portfolio, or what we referred to previously as a customized index. We're doing it basically the same way with the Vanguard personalized index platform. So we start with an index, we look at the underlying constituents of that index. We then can take out specific securities that clients do not want. We can also score securities based on specific attributes that they do want to use, whether it be some sort of financial statistic like a style factor, like book to price or dividend yield or market cap size, or more qualitative characteristics such as environmental social governance characteristics, things such as carbon emissions, percentage of women in their C-suite and board directors, percentage of revenue attributed to specific impact-oriented products and services. These are the type of attributes that are part of our customizations that we can input into the portfolio. And then finally, we run it through the same optimization process so that the portfolio meets the same level of diversification and risk criteria relative to the benchmark, but it also has all the customizations, the choices that we had originally placed into it. And that's effectively the process of creating a direct indexing portfolio. Now, the one trick that we really built here is that we put it all on a pretty slick user interface so that you, Glenn, in particular, can build this portfolio on the fly for a client within a matter of minutes, if not seconds.
And I can attest to the slickness of your technology, because I've sat with clients who are Nike executives and very quickly been able to show them, okay, this is how we could build a portfolio that replicates the performance of the S&P 500, but doesn't have Nike in it, because you have so much Nike exposure in your 401k or your stock purchase plan or wherever it is. And so that's been super helpful for us, particularly with Nike and Google and some of the big Fortune 500 companies where we have clients that have so much exposure outside of their portfolio. So thank you. I feel like we're doing our listeners a bit of a disservice, though, because we're 6 or 7 minutes into this conversation and we haven't talked about the most important part. So can you then connect the dots for us and tell us how direct indexing looks to generate better post-tax returns for clients than the mutual funds or the ETFs that they're used to?
Yeah. So there's one major advantage to direct indexing and SMA portfolios versus what I would generically call a commingled fund, like an ETF or a mutual fund. And the major difference is that within a direct indexing separate managed account portfolio, you are holding a subset of those securities that are in that index, as opposed to holding one single investment in your account. And the benefit of holding all those securities is that on an ongoing daily basis, we have the ability to review the portfolios and see if any of those securities have any unrealized losses within the portfolio. And if we were to sell those losses, and as long as we're not upsetting the tracking error, we can realize those losses today, maintain the overall profile and similarity of the portfolio relative to the index. But now you have what we refer to as basically a tax asset or a tax benefit from that harvested loss that is coming from the trading. And those losses can then be applied to other parts of your investment portfolio. It can be applied to the portfolio or other parts of the portfolio to minimize the overall tax impact for your client. So that's the real benefit of direct indexing. The major benefit of direct indexing is the tax alpha component.
Got it. And we've seen that in spades over the last year. During a really volatile market, I've watched firsthand as your team has traded over and over in some of these accounts with this automated method, just to simply capture all these losses along the way. And to sort of complete the picture, I'll tell you now, I'm using the same report with clients as we get close to the end of the year to look and say, okay, Sherwood and his crew have done all they can to capture losses. Now we're left with a bunch of gain security. As we talk about making charitable gifts, oftentimes the very best thing we can do is go back to that exact same account, find the one stock, and this year we're probably going to give away a lot of NVIDIA, I would guess, right? We can find the stock, the individual piece of that index that's appreciated the most, and have clients give that to a 501c3. We essentially write the IRS out of the equation, and they're able to recognize that really, really valuable philanthropic gift in a super tax efficient manner. So again, we've really, really been impressed with both the ability to capture losses, but then also the ability to focus on the gains and to look at making really tax efficient gifting. So Thank you again on behalf of our clients from that. Sherwood, these portfolios aren't for everybody, and the benefits don't really apply equally. So can you give us a sense as we wind down here of sort of who you think are the clients that would benefit most from this type of strategy versus those who aren't as likely to see as much of an advantage?
Yeah. So as I mentioned, the major benefit for direct indexing is the integrated tax loss harvesting, right? And that basically means that if you're, especially an ultra high net worth investor, that tax alpha holds more value to you as opposed to someone who is not impacted by taxes as much. And this is certainly true for non-taxable and taxable. I'm sorry, non-taxable and tax deferred accounts. So if you're looking to do direct indexing for those accounts, direct indexing portfolios do cost more than a commingled low-cost ETF product or index fund. So for instance, we work here at Vanguard. I think we are some of the lowest commingled fee products in the world, and Vanguard aspires for that goal. If the tax alpha benefit is not there, nor is the ability to customize the portfolio for a client based on their individual values, as a fiduciary, I would also just simply say, buy the cheap commingled ETF because this is inherently better based on the overall fees. And that's where direct indexing does not make sense for a client. But in the other use cases, there is compelling points to that.
Got it. Well, I certainly appreciate the focus on fees because when we analyze investment opportunities, that's the first thing that our CIO and the team are looking at. And so for listeners, to give you some perspective, if I were to go to a Vanguard S&P 500 index or some broad market index, I'm likely to pay less than 10 basis points for that portfolio, which is what Sherwood's referring to. If I go out and build a direct indexing portfolio, I'm likely to be paying 2 or 3 times that amount. And then if I go out and hire a group of men and women to make active decisions about that portfolio, I'm probably paying 10 times what Vanguard is charging for the index, right? Because unmanaged index fund is probably going to be 10 basis points, and managed products is going to be about 1%. And so direct indexing is going to be on the closer to Vanguard's sort of bare bones pricing. So for a lot of our clients, it's actually been a cost savings on some parts of the portfolio, going from an active strategy down to the direct indexing strategy that you join. But we're absolutely sure with seeing what you're saying, which is the lion's share of the clients that we're using the strategy for are using it in taxable accounts, where we have it in IRAs and 401ks, primarily IRAs, is where folks have said, I just want a low cost option where I have some control. And so we can tilt a little bit in retirement towards dividend producing securities. We tilt a little bit up the cap range to larger companies. They like to have that sort of control, but to your point, we miss out on the real tax benefit. And so that's been certainly an ongoing project here over the last couple of years, is figuring out where these portfolios fit and how they fit in. So last couple of questions here, Sherwood. As you look at the landscape now, my perspective on it is that you all were sort of the pioneers tech-wise in this space. And so as the technology continues to evolve, where do you think this goes? Is there anything that you can shed a light on that you think we'll be seeing over the next couple of years?
Yeah, so we're here in the Bay Area, in the San Francisco Bay Area. So we see a lot of technology innovation in this area, and we love seeing all this groundswell of activity here. For us, though, and specifically the Legacy Just Invest Group and now the Vanguard Personalized Indexing Group, we are very much focused on providing more automation in our portfolio management services. And this automation comes in the form of, we're not here to replace the advisor. In fact, we're here to make the advisor's job easier as you look to service your clients. And what this basically means, at least for us, is better automation, not only in terms of a separate managed account for one account, but potentially across multiple accounts and also a household. So what's really been keeping us up late at night and really getting us excited when we go into work every single day is the ability to run some sort of automated SMA portfolio across multiple accounts, of which they have different account types, different account tax IDs, different types of users within that overall household. So imagine running an SMA strategy not in one account, but in a total household of accounts, right? And then more precisely, through a tax standpoint, locate securities in the correct accounts based on their account types. So for instance, if you're able to locate securities that have high taxable income yield into the tax deferred, tax free accounts, you're able to shield that income from the tax impact, all the while maintaining the overall profile of that SMA strategy across the total household. That's something that's collectively referred to in the industry as householding and asset location. But we want to do this on an automated basis to serve clients as a whole. Again, it's another technology solution to this direct indexing standpoint. And that's what we're working on. And we're happy to chat with you and your colleagues more about that.
That's pretty slick. I like the idea of being able to use this while also sort of sharpening the knife on the asset location part of it. We try to do that at a fund level to say, okay, this is a bond fund. It's just going to generate ordinary income for this client. We want to stick it over in a deferred account, that sort of thing. So the idea of doing that at the security level is pretty exciting. Well, very cool. So thank you for giving us a little bit of a glimpse into the future. Last question I have for you, my friend, is how can clients learn more about direct indexing? How do we learn more about the ins and outs of what you guys and gals are doing?
Yep. So obviously we're part of Vanguard now, and there is obviously a public webpage on our direct indexing services and capabilities. So you can just Google Vanguard Direct Indexing, and the first thing will pop up will be our webpage, and you can learn more about that. However, if you really want to see the core offering of what we do, I would suggest any individual investors to reach out to you, Glenn, personally, because right now our platform is only available to independent advisors such as Arden Rich Messina.
Thank you again for sharing your insight and expertise. Any final thoughts or comments before we wrap up?
No, I look forward to working with Arden Rich in the future. I'm super excited about where we're heading to this today. Obviously, the acquisition by Vanguard has been a really huge boon for us, and we continue to build off of that. But first and foremost, we care about this relationship with the advisor. So we continue to look forward to working with you all and see what we can do to help solve individual investor problems.
Excellent. Well, thank you. If any of those individual investors are listening and they have questions and want to contact you, they can reach out to us and we can connect you as appropriate. So to our listeners, thank you so much for your time today. You can visit our website at ardenrichmessina.com and check out our blog for more interesting podcasts and articles on relevant topics. Thank you, Sherwood, for being here today, and thank you to the audience for joining us.
Thank you for listening to Arden Rich Messina's podcast. Please see the podcast description for important copyright and disclaimer information.